Hello, everybody, and welcome to tonight's live. Nadine Parsons from Golden Key Finance, and I have with here my very good friend, Aidan Kelly.
Hello.
Aidan, this is your first live here with Positive Property.
It is, yeah. Look, and thank you for the opportunity. Look, we've got some good content to talk to tonight about. So, look forward to answering a few questions when they come through from everyone out there. Please don't hold back.
Yeah, perfect. Cool. Well, everyone that's watching this, if you want to know any more about super and how to get started with property inside super, put hashtag super in the comments here and the team will reach out and get in touch with you. But let's just jump in, shall we? Why not waste any time? I think this is a really, really exciting, topic, one that I'm quite passionate about. But Aidan, give us a little bit about you. What's your background? What's your role?
Yeah,
what can you offer us?
So look, to start with, I'm a licensed financial advisor, licensed to give advice across all areas, whether it be superannuation, investing, insurance. We can do it. To start with, just as a bit of a disclaimer, and all good presentations start with a disclaimer. Tonight we'll be covering generic information, generic strategies. Look, again, we can't stress enough that before you decide to take action, please reach out, get help from professionals, get help with the team from Positive Property. Look, my role is to help with any members, clients that are looking to develop wealth strategies, savings plans, and property investment as well.
Beautiful. Love it. Jump in the comments as well, guys. If you've already got an SMSF and if you're utilizing it, that'd be good to know. And again, hashtag super if you want to know more and we can get started. But Aidan, I said I'm passionate about super, but really, what is it? Like, what is super? It's something that I know that my employer pays, but what is it exactly?
Yeah, and look, for most Australians, it's the one most important investment decision they make at a very young age. Normally when they start the first job, and absolutely, employer contributions go into super, and superannuation is a retirement savings vehicle. So that when people decide to finish work or retire early, it's really this asset and structure that allows people to draw income and replace the income that they would have earned when working. And that can come in a few different ranges, whether it be an income stream, lump sum, and then inside a self-managed super fund or any superannuation fund, there's investments, and whether that be from super low risk to cash to conventional shares and portfolios like that. So in investment universe of superannuation, there's a lot of things that it can be invested in, a common strategy that we're seeing more and more popular is the choice to invest in property using superannuation.
Yeah, beautiful. Cool. So for those playing along at home, SMSF, self-managed super fund, bit of a mouthful to get out. But what is the benefits of creating a self-managed super fund? Like what's the difference between that and a normal fund?
Yeah, and look, the important decision before you take to really decide what your journey is to seek advice. A superannuation as a whole, not just self-managed super funds, is a really complex area, and it's for most Australians, from a retirement point of view, it's the asset that most people will rely on. So before you do anything, I can't stress enough, have a look, review, have a look at the performance, what is it doing, and then really figure out what are your next steps to growing wealth and looking at that future income savings. So, a question that's just come through, when should I start putting money into super? Well, I mean, any investing, the earlier you do it, the less risk you have with anything. So contribution into super is a really, really efficient structure and strategy that can build wealth over time. Super as a whole, why we like it, it's a structure that means when you're retired, up to certain limits, and I won't confuse anyone out there on what they are because they are forever changing. It allows you to draw an income stream that is largely and can be tax-free. So it replaces a wage that you might be earning while working into an income stream that could be tax-free.
Yeah, perfect. You just touched on then wages that you could be earning. What if I'm self-employed? How does that work? Can I contribute to my super as a self-employed individual?
Absolutely. Yeah, absolutely. So anyone employed or self-employed can contribute into super. And it's certainly something, depending on what income you're earning, there can also be tax benefits to doing so.
Yeah, perfect. Cool. Drop some more questions if you've got any, guys, in the comments. Keep them coming through. Throw you one here, Aidan. It's a question I get all the time in my world, in the finance world, is super seems to be a bit of a scary subject. And I think there's a lot of fear struck into people lately around compliance. Now, from my aspect, I understand there is a lot of compliance, but is someone like you and partnering with someone like you the best way to navigate all of that?
Oh, look, understanding what your super's invested in, what your strategy is, what your contributions are. For a lot of Australians, there's insurance inside of super too. So again, if we're talking about considering a self-managed super fund, one of the important considerations is, is it right for you? How to set it up, the structures to do it, but then also, how to manage it and what are the ongoing obligations. So look, you really want to make sure that you've got the right team around you, that if this is something that you do decide might be a potential strategy, that you have the right team in place to set you up for success.
Yeah, perfect. Cool. So setting it up for success and thinking about retirement. I mean, I'm in my very early 30s now. I don't like to put that out there too much, but is it something I really should be considering now? Or I'm going to retire in 30 years, ideally.
No, look, absolutely considering superannuation now, and whether that be property inside of super or just your investments that you currently have, you really want to make sure that it's working for you now. And again, with any investing, the more time you have with investing, the less risk you have to take over that period of time. So if you, for example, if you're 30, you've got 30 years really before you can access it at 60. So the little things you do now, like extra contributions, maybe growing wealth in property or in shares and things like that, however it's set up, if you've got 30 more years of it being, before you can use it, you don't have to take as much risk later on in life if you pay attention to the current day things of how it's invested, the fees, do you have the right insurance in there, how's it managed, and then if it is self-managed super fund with property, well, how's it set up properly?
Yeah, perfect. Hello to Adam Vella. Adam, thanks for joining us. Got a question there. What's the minimum needed to invest in property in the super fund? I'll tackle this one. I know that George did a webinar last night, and George's figures in there was a minimum roughly of 150,000. Now, of course, that can be changed slightly given everyone's individual portfolio, investment strategy, and goals as well. So the best way to get a good understanding of what balance you need is to book a chat with me first as finance. I can then look at the servicing of the fund and then see what that balance needs to be. And then I guess touching on that, Aidan, if I determine that the balance is a little bit short, how can we get more in there? Obviously, we touched on contributions. Is there a benefit to doing that from a tax point of view?
Oh, look, yeah, absolutely. And again, this comes down to everyone's individual circumstances, is that if there is ability to contribute extra into superannuation, we do have options that can actually be tax deductible. Again, we'd have to look at your income, your wage, what is coming through on a weekly, a daily basis that you can afford from a cash flow. But absolutely, there are ways in which we can boost superannuation if you have the means to do so. Again, we want to cover off and make sure that you've got your personal finances and personal cash flow sorted. Again, Nadine works with the banks to make sure that any personal debt is cleared up, or we tidy up the car loans, the bad debt, the credit cards, because we want to make sure you've got cash flow. And that's cash flow outside. So again, how you generate wealth, positive cash flow outside of super and then also in retirement.
Yeah, beautiful. Cool. And cash flow is king. I know that's George's number one saying. So if you want to hear more about cash flow, again, hit #super in the chat and the team will reach out and get in contact with you.
Yeah.
Question, Aidan, what's better, property or shares or both? Thanks, Helen.
It all comes down to everyone's individual goals and objectives. And, for most Australians, they feel more comfortable with property because you can touch it, feel it. But that's not to say shares aren't a very viable investment option as well. And it will come down to a range of factors, how long you've got until you need to access the money. So property has a fantastic average growth rate. If we look across Australia, fantastic growth rates, good rental incomes, things like that. The downside is that if you're retired and you need to use that money, it's what we call an illiquid asset. You can't just slice off a side of the kitchen or bathroom to go use for your holiday. So I would always find a combination of all these different assets, whether it be property and shares, cash, things you might have heard of called bonds, all form part of an investment portfolio. And everyone's circumstances will depict what one may work better, may not. So, and it also comes down to risk profile. How comfortable are you individually in taking risks, knowing that shares can go up and down, and so can property, and obviously cash doesn't really move ahead at all.
Yeah, cool. Great question here from Kane Fatarini as well. Thanks, Kane. Good to see you here. What's the earliest age you can draw from a self-managed super fund?
Yeah, so the earliest you can draw any funds from superannuation is age 60. So that's whether it be in a self-managed fund, an industry fund, a retail fund, all the rules in terms of access and what we call conditions of release in terms of getting access to the money are the same across a self-managed super fund and an industry fund. So age 60 is the important factor there.
Yeah, cool. Beautiful.
There is some other circumstances, like if you're totally and permanently disabled, in financial hardship, very specific sort of key events that sort of fall outside that. But typically getting access to the money for use in retirement or supplementing income stream, age 60.
Yeah, perfect. Cool. How do I go about creating a super fund? You've got me all excited. How do I create a self-managed super fund? Yeah,
so the first step is to get advice. And look, I've just seen a comment here from one of the users that sort of went over, here it is, about a self-managed super fund that was set up, cost a lot of money, didn't really do anything. And look, that is unfortunately, I do come across that a lot. And my first comment in response to that, Nadine, is get advice, seek advice, understand what your goals and objectives are, understand if you do make decisions, how do they play out now and in the future. And property is a really viable strategy for a lot of people. But again, these type of scenarios and strategies are personalized. So you really have to make sure that it's going to fit in your risk profile and your longer term plan. So look, it's everyone's a bit different in scenarios and strategies and how it works. But you definitely do want to sit down with a licensed advisor, understanding that anyone licensed has the ability to do the research to provide and understand the impacts of moving out of one fund into a self-managed or into another fund. So we really want to make sure you have those clear comparisons to understand what you're actually doing. What is the benefit and what are the disadvantages, and what are the things to consider.
Yeah,
so
perfect.
The first step, get advice. Reach out, sit down, have a chat, get advice.
Excellent. And then I guess as part of getting advice, I've had a super fund since I started working many, many years ago. How often should I really be reviewing it, either an industry fund or an SMSF? Is it annually? Is it quarterly? Is there any time?
Look, annually, as a first step. Look, investment markets move and then property markets move as well. So look, at least annually, as a bare minimum, we would sit down with any of our clients and members that come on board once a year to reevaluate strategy. But yeah, at least once a year, definitely.
Yeah, perfect. I love the comment here. I just have to give us a bit of a pat on the back here. That's a comment from a member. I've already signed up with Nadine and Aidan, the A team, and they're doing some great work. So thanks for that. Once again, if you want to know more about super, how to set it up and how to utilize it, #super in the comments and keep all the questions coming through. We've got some really good ones here.
Yeah, and I might just, Kane, I might just cover that one off as well. So you are correct, Kane. Kane just asked, from what I understand, people can combine their super funds with other family members and friends. Absolutely. So self-managed super funds, you can have up to 6 members in that fund. Now, I would again heed caution to adding, friends and different stages. And again, this comes back to get advice before you do go into this, because everyone's scenario and strategy is going to be a little bit different. Say, for example, investing with older parents. might be a really good way to accelerate and really ramp up a superannuation balance. But as for example, older parents get to a stage where they don't want to start drawing on that, we really need to consider, well, how is there going to be enough cash and money left if our assets are in property or in shares, so that then the older members can still draw their income and still replace their wage. So while it can be look, I think any investing, it's you have a good team around you, and that includes family, is a very powerful thing. But you really want to make sure and understand that if you are investing with other family members outside of your core group, that there are probably going to be different circumstances that you want to cover off. But it can be a powerful strategy when done well.
Yeah, cool. Absolutely. And is there anything else? I mean, we're talking investments here within Super Fund, but is there any other big picture things we need to consider? You mentioned insurance a little bit earlier. Is there other components we need to review?
Yeah, look, absolutely. And I think, risk mitigation. So we talk about, insurance and no one likes paying insurance premiums for whether it be the car or the, house or personal insurance policies. But again, when we talk about growing wealth, there's no point us discussing how we grow wealth and how we drive passive income personally. And if we're not going to put in place a risk management plan, that if we stop work or can't work, the whole plan falls over. So again, one of the key considerations to any plan is what happens in the worst event. So how do we protect the family, the group, if income stops, if contributions stop? So reviewing insurance and then making sure you tie that off with estate planning. Look, I would think that 80% of people that I talk to don't have a proper estate plan or a will in place. So, as a bare minimum, we want to see everyone just cover that off and make sure that we've got those type of structures in place. And it doesn't have to be complex. It can be, but it doesn't have to be. But it's more about just having it all there.
Yeah, cool. Awesome. Well, I think you've given us a really broad overview of super, what it is, how it works, and how we can utilize it. We just got a couple more minutes before we need to run across to our Black Belt group with all of our members in there. So if you've got any dying last minute questions, now's your chance to get them in the chat. Once again, #super if you want to know more about anything that Aidan or I have touched on. Otherwise, if there's no more dying questions, we'll jump across into the other group. Any last minute comments, Aidan, before we run away?
Oh, look, I really like, any investing, as said, start early, gives you more time, the less risk you have to take. Property, and all we have to do is look at the ATO, put out statistics every year of how many self-managed super funds are set up and what assets they're investing in. And every year we're seeing more and more self-managed super funds invest in property. So without a doubt, it's becoming a much more popular strategy, which it can heed really good results. But again, get advice, check off on all the things that you have to look at. Contributions, insurance. Is it right for you? And what are your longer term goals? So, yeah.
Yeah, perfect. Cool. Just quickly, Adams asked, can you have an SMSF within a trust? Do you want to touch on briefly the SMSF setup and what that looks like?
Yeah, so a self-managed super fund is a trust in itself. It's a regulated trust. So when you're setting up a self-managed super fund, you do have the options. And again, this is where we take any member and client through our process and what we would recommend and how we would recommend you establish it. A self-managed super fund has to appoint trustees, and that can be individually or it can be a company. And Nadine, you might want to comment on, when doing lending, what's a bank's preference?
Yeah, well, we have to hold the property inside the bear trust. So it's a super fund finance itself is really, really straightforward. It's actually one of my favorites to do. So really simply, you've got rent coming in, contributions going in, and you've got a loan coming out, and some other smaller fees, obviously your management of your super fund and, things like your council rates and water rates and all those little incidental things. So super fund lending itself is really clear cut, to be honest with you. And it's a great strategy, in my opinion, if personal funding might not be an opportunity for you. So, yeah.
Sure. Yeah.
Perfect. All right, guys. Well, that's it for us today on the live. Thank you so much, Aidan, for joining us and sharing all those knowledge bombs with us, if you like. Thanks, everyone, for joining along. And for those of you that are members, we'll see you across in the other group in a moment.
Good stuff. And feel free to reach out, please. I cannot stress enough. Any questions, any thoughts, I'm more than happy to have a conversation in line with Positive Property. Talk to your team there. Really here to help and guide. Thank you.
Beautiful. Thanks, Aidan, and catch you guys soon.
Thank you. Bye.
Bye.